Hello, everybody, and welcome to the Open Cry Market Commentary for the week of August 12th. My name is Toby Gennaro from Trade with Precision, and we'll just be taking a look at some key markets here to see what's on tap for the week. So just getting started here, taking a look at the big cap stocks here on the S&P 500. We're looking at the index futures contract, the mini contract, the ES. And just starting from the top down here, looking at the monthly chart, not a whole lot's changed here. We just put in a yet another higher high for the new month candle of August over the previous month. So things are getting a little bit overextended here as they have been. We really haven't had a pullback since back here back in November of last year. So we really haven't had a pullback much in the whole year of 2013. So we're really overdue. It looks like something deeper could be in the cards here. As we move down to the weekly chart, we can see that we do have some overextension here as well. It's not too bad from the moving averages, but it looks like we have a bearish candle there if we end up breaking the low of that level right there, which is 1680.50, which is going to be the same low as that bullish candle on the daily chart. We get a break of that one. More than likely, we might be looking at a pullback here on the weekly chart, which might be a little bit deeper. As we move down to the daily chart, we can see last week we got this pullback structure right back into the moving averages. We had a nice bullish candle there. The bottom was 1680.50 and the high was 1693.50. We immediately broke that high the next week, but just failed to move higher. We had a couple of simultaneous touches up there around that resistance level of 1695, 1696, and then we just continued to break down off of that with a series of lower highs and lower lows, as you can see on some of these lower time frames. So if we end up, we're right at a critical point right here at this level of 1681.75. If we go too much further, break that level, that certainly invalidates the long trade for the trend flow strategy going along this market. Based on that bullish candle in the buy zone, it looks like we might be getting a steeper pullback here, potentially on either the daily chart or it could even be on the weekly chart. We're just not sure just yet. But right now we've got a level in there right around that 1670 level, and that could be anywhere from 1670 to as low as possibly 1665. Which would make sense. We have a couple of touches here. We get a break of this level. 15-point move down would take us right down from 1680 down to 1665. That'd probably be a reasonable area to start looking for a bounce. And then we'll have to really start looking for some divergence on some of the charts. Like, don't know if at that point you get it on the 480, but you can look on the 240, the 120. And at that point, at 1665, we can start looking for some divergence and a possible reason to get long again this market. But as we talked about last week, we put in that most recent higher high there at 1705, and then we put in a lower low for the first time on the weekly chart. So we've got some divergence on the weekly chart, and as we move down to the daily chart, you can see we had that higher high back here, and then we put in our first level of divergence back here at that 1695 level. And then most recently, at the most recent high, 1705, we put in another level of divergence. So we had three lower lows there on the indicators, almost pretty much even there on the RSI, but we still had a higher high in there way back in May of this year. So, and then on, as you remember, on the 480 chart, we had these higher highs, three higher highs in here, and then three lower lows, and very obvious there, the divergence, and we ended up getting a breakdown off that most recent high. So we really haven't had any kind of bottom out here on the indicators on the 480 chart, which I'd probably be looking for before looking to get long this market again. And things aren't looking too good right here for the market. We may get a little bounce out of this, but I'd be probably any rallies here into the moving averages, I think, are going to be met with some selling pressure. So just kind of cautious this week, biding our time, looking for a solid entry to potentially get long. This could be the beginning of a deeper pullback, but as with all these deeper pullbacks on such bullish higher time frames, you'll always see some steep rallies on a lot of these pullbacks like we've been seeing last week. So that's kind of what things are looking like this week. We're just kind of cautious, biding our time. We just really don't have a signal here to get long the market again. I'd be looking for some of these levels down here around 1670, 1665, and then see what the charts are telling us at that point. And so overall, that's the outlook for the market on the big cap stocks this week. And moving over to the small cap stocks, looking at the Russell contract here on the monthly chart, pretty much looking the same as the chart on the ES. Big candle there for the month of July, just starting out the new August candle. Put in a new high, a lot of overextension there, and then pretty much a similar looking scenario here on the weekly chart as well. We've got a bearish candle in there. I don't know if we're going to get a break of the low of that candle, but the low is sitting in right around 1040.50. And we're currently right around that level at 1044. So it's got a little ways to go to break the low of that candle. If we get a break of the low of that candle, more than likely this is going to be a little deeper pullback here. We can see that a little bit different here on the indicators. We don't have any divergence with that most recent high that we had over the last couple of weeks. But we did have some divergence here on the daily chart. Just basically had one lower high in place based on that most recent higher high right there on the price action, which was right around, it looks like 1062. Let's just make sure there, 1062 was the high. And then you can see obviously that divergence there on the higher high here and the higher high here. We had two lower highs on the indicators, both the MACD and the RSI. And so right now it looks like we're coming right back into a pretty solid support level there. If we get a break of this 1040 level, more than likely very similar to the ES, we're going to be going lower here. And there's some different levels here, like this level right here looks right there, right around what is that, 1036. Looks like if the market broke down below 1040, more than likely it looks like it would come down a little lower than that, maybe down around the 1030 level. We really don't have any kind of a level around there that looks anything worthwhile. 1027 might be something to consider if we get down that far, but it's a pretty solid level there, looking right around that 1035, 1036 level. We'll just have to see what happens there. But on the daily chart, you can see that we have a couple of nice bullish candles right smack in the buy zone there. Let's check the lows on those. We have the low at 1040.50, 1041.50, 1040.80. So we haven't broken the low of those candles necessarily, and we haven't broken the high there. The high is 1049.70. Actually, we did 1051.80 and then 1051.40. So really have kind of a consolidation range there for 3 days, and this market could easily just break the high or it could break the low, very similar to what we're looking at on the ES. So we're really going to have to bide our time here and see what the market's going to do. But 1036 looks to be a very reasonable support level right there. We'll just have to see if we get a move down and it bounces off that 1036 level, get a nice rejection candle there off of this resistance level, this support level right here. More than likely we could potentially break the high here of this grouping of candles and then move back up to the high. But again, any retest of the high back at that 1060 level, I'd be looking for some serious divergence here on the daily chart and potentially even for the first time maybe on the weekly chart. And that might give us some clues as to what the longer term direction of the markets might be. But for right now, if we take a look at some of the lower time frames, we can see a couple of touches there at that lower level. The moving averages are rolling over. Look like they're starting to get into alignment for possibly a move lower. And so we'll just have to be cautious this week to see what the market has in store for us. Yeah, let's just take a look at one more U.S. index here, looking at the NASDAQ 100 ticker symbol, the NQ, the futures contract. A lot of these indices are they're very much correlated. So the patterns that you see in one index, you'll typically see in others as well. So if we look at across the board at a couple of these, might give us a little bit more indication of what might be happening this week. But looking at the monthly chart, we don't have a whole lot different here. We just put in obviously another higher high following a bullish candle there, the same as the other two indexes that we looked at. And then we don't have a lot of overextension here, too much from the moving averages, but we could be due for a pullback there if we break the low of this candle right there at 30.90.75, and we're currently about 9 points away from that. So that I believe that's the same low as here on the daily chart, which was that very bullish candle that set up a couple days ago, and then we broke the high of that candle, almost got back up to the high, and then rolled back over. So it looks like we might be coming down to either retest that level, or potentially if we can break that level, then there might be some more downside here to possibly this level here at 30.68. That would actually be a 62% retracement from the swing high to the swing low, which could be very possible. So things on the Nasdaq still pointing. Looks like things are pointing a little bit lower here for the market. So across all the indices, things appear to be moving lower, at least in the short term. And then we'll have to see what happens this week. But as you can see on the Nasdaq, we don't have really any. We do have some divergence here on the daily chart. Things are pretty flat here on the RSI. And looks like we're trending back up to potentially a higher high here on the MACD, and at least an equal high here on the RSI. So we don't have that same divergence in place on the weekly chart, but we can see a lot of that divergence in place on the 480, which gave us some of this pullback, which might be coming down a little bit lower. So if we end up breaking below this 1390 level, chances are we might get back down to this 3068 level, which could be a decent level of support if the market really gets rolling. 3025 is pretty low, but that's the most recent swing low, and more than likely you'll see a lot of buy orders accumulating around that level. But for right now, we're looking pretty much at these two levels, the 3068 and the 3090, for some kind of a bounce, unless this is going to be just a deeper pullback on the weekly chart. So really, pretty much all three indices are telling us the same thing. Be cautious this week, and let's bide our time and look for a better opportunity to see if we can get long this market in the coming weeks. So there's the outlook for the markets this week on the U.S. indices, and we'd like to thank you all for watching the Open Cry market commentary for the week of August 12th, and we do look forward to speaking to you next week on the Market Update.